What is up, guys? Today I'm gonna be showing you how to catch trades every single week, how to figure out where the market's gonna go every single day, and I'm gonna teach you guys this all for free, and all I want in return is your subscription. So let's hop onto the markets real quick so I can start telling you how to actually analyze. So the first thing I do when I hop onto the markets is, first of all, I check news. If we have something really volatile, for example 830 CPI, like, first of all, don't trade before any high volume news, and second of all, try to avoid days like FOMC, because if you're unexperienced and you don't have a model for it, you're gonna get stopped out. So the first thing I would do is check the market, like what's happening in the markets on forexfactory.com. The next thing I would do is mark out the highs and the lows of the previous week, because if we look at what occurs, there's something called a CRT that happens sometimes. So look, if we see the previous week high here and the previous week low here of this candle, do you see how we manipulated, swept this, and went down to take the low out? So if I actually zoom in on the 1 hour time frame and I properly mark this out, because the time frames got cooked. So this was that previous week's high. This is the previous week's low. So if I mark this out, what do we see? Usually what happens with this is, if we have the weekly what's called the weekly profile, what would occur is Monday kind of moving around, Tuesday we manipulate, Wednesday we start moving down, Thursday down, Friday we close, right? Something like this is what usually occurs when we have a decent weekly profile like this, right? So if we hop over to the charts, if we hop onto the 1 hour, we see exactly what I said. Like what's called here. Start on Monday, this is the previous week's high, this is the previous week's low. Start on Monday, kind of consolidated a bit. Tuesday, we begin to manipulate. We took out that 1 hour liquidity, moved out, kind of manipulated the previous week's high. Wednesday went down, Thursday, and then Friday closed. So we made that candle, the bearish candle. And that happens almost every week. You have to, again, if you see the previous week's high get taken out, don't automatically assume it's going to short. All right, you have to wait for confluences and see what's happening. If you see that the previous week's high got taken out and then we change structure on a high time frame like the 4 hours or the 1 hour, then expect that it might be bearish. Also, again, take into account what's happening in the world right now. For example, if we look at this week, this is the election week. Last week was election week. Do you see how volatile that was? How high that was? Technically, I wouldn't have been actually, I didn't even trade this week because I knew that I might have gotten stopped out. I'm not the most experienced trader, so I just wanted to minimize risk, and that's what separates trading from gambling. Remember that. Let's hop onto the daily. So after I mark out the highs and the lows, hold on, I erased it here. So after I mark out the highs and the lows, I hop over to the daily, and keep in mind I'm also marking out fair value gaps and things of that nature on a weekly. But right now there's nothing like really interesting going on in the week other than the fact that we took out the highs. So fair value gaps, there's none either. See, there's a fair value gap that's forming, but it didn't form yet. So if we hop onto the daily, we see that first of all, we manipulate past these highs, but there's also fair value gaps here and here. We disrespected this fair value gap, or we're about to disrespect in a few hours, in 18 hours. So I'm gonna assume that we might kind of dump into maybe the midpoint of this, the consequent encroachment of this fair value gap, like somewhere around here, maybe down here. Start moving up. I'm not sure. If somebody tells you they could predict the market, they're lying to you. So what do we see after? So if we hop onto the 4 hours, what I do is I mark out again any fair value gaps that I see. Well, I see this fair value gap. Looks like we respected a few times. I also mark out if there's any SMTs. So here, that was already marked out. So if we see this, there's an SMT with this high, and boom. That's really all I do. Maybe I would mark out some order blocks. Like this one, right? I just mark out like just interesting stuff that's occurring. I'm already looking at this without any past information, without any further information, if I took away this whole move, I would have already been expecting bearish, or this move. I would have already been expecting bearish because of the fact that we have an SMT, we touched into an order block, fair value gap on a high time frame. We took out daily highs. We manipulated past it, took it out. I would have already been expecting bearish. Also, we broke structure on a high time frame, like 4 hours. Again, I would have been expecting bearish. I would have traded again at 9 because that's market open. And let's see if there was any setups at 9. So let's zoom in on to 9. So 9 was right here. So what I noticed is we usually start a move early. So on the higher time frame, we start a move around 8-ish. So 8, 7, and then 9 continues it for the rest of the session. So let's see what we have on the higher time frame. So again, we're on the 1 hour. We see that we're respecting this fair value gap right here. I mean, this inverse fair value gap right here. So we inversed it, touch back into it. We're kind of starting to respect it. I also see that there is kind of a sweep of liquidity on the higher time frame right there. Right? So if we look at 9, what do we notice? First of all, again, the reason why we're starting to be bearish is because of this SMT, the respected inverse fair value gap. Boom. We also inversed a fair value gap right here on the 1 hour time frame. I mean, we inversed a fair value gap and we broke structure on a 1 hour time frame. So boom, here and here. And what happens because we inverse that fair value gap? I mean, because we broke structure, this now becomes an order block. Boom. So let's hop on to the lower time frames. So what would I have traded? In this case, the 15-minute. Again, we touched into another 15-minute fair value gap. Do you see how I'm like slowly zooming in and in and in? This is what I want you guys to be doing every single day. So start off by knowing how the week's gonna go, then check the daily, then check the 4 hour, then check the 15-minute. So boom, we touched into that fair value gap. Let's see the 1 minute if there's any proper entries. Boom. As soon as we touched into that 1 minute fair value gap, plus keep in mind, again, we took out some more liquidity on our way up. I don't even know why it went down there. We took out more liquidity on the way up, and we touched into a 1 hour order block. Everything is pointing to bearish. High time frame bearish move. Daily high getting taken out. High time frame change of state in delivery and break of structure. High time frame inverse fair value gap. High time frame order block that we touched into. High time frame fair value gap that we're starting to respect. And then we also have that 1 minute order block. Literally, maybe I wouldn't have bottom ticked this move. I wouldn't have like probably done it here. As much as I would like to say I would, I'll be honest with you guys, I wouldn't have gotten that trade there. I would have most likely entered when we entered this fair value gap. Probably roughly around here. Like, I would have tried to get in as early as possible, but it would have moved me up a bit because that's what brokers do. My stop loss is going to be right over here, like the high of the other fair value gap. And then we take my, what's it called? Change of standard deviation. Go from the sweep, because we took a sweep on the internal highs on the 1 minute. Bring it down to the change of state in delivery. And I'll target right here. This would have been my trade. Again, I like to take short trades. I know I would have missed this huge down move, but I like to keep my risk minimized and trade exactly what I feel like is going to happen. I don't want to take any unnecessary risks. I don't want to get too greedy, because when you get too greedy, that's when you start to get humbled. That's literally it. This is kind of like a faster paced video. If you did enjoy this video, and this is why I usually keep it to the end, comment down I've watched. I like to see who fully watched these videos, because if you're able to fully watch these videos, that means that trading might actually work out for you, right? If you're able to watch these boring videos. Also, I keep this in the end as well. I want you guys to join my Discord server. It's completely free. It's literally for anyone that's trying to get good at trading. We have kind of like morning people like usually just talk about their trades, what they're about to take. We help each other learn. And I also made a free strategy video. Go check that out right now. If you did enjoy this video, please subscribe. I won't keep you guys longer, so I want to say peace.